Good evening, everybody. How are we doing this very exciting and wonderful evening? I just want to say a big thank you once again. You're welcome to another series of this Start of Compliance series. I am very excited. I am very happy to have everyone here. It's a very, very pleasant evening, and I know that it's just going to be quite interesting and fun. So, without further ado, I would love to just basically introduce myself. My name is Rosemont Phil-Othihiwa. I'm a corporate commercial attorney, and I am privileged to be your host for this session. I am your host, and welcome to Q2, guys. We've had a very, very interesting Q1. We've had seasoned speakers from different walks of life come to speak to us on very interesting topics. We've talked about, trends for 2023. We've talked about employment law compliance. We've talked about corporate governance. We've talked about taxes. We've talked about employment. We've talked about so many things. So I just want to say thank you. Thank you so much, Dr. Tochiku, for being here. So I'm really, really excited. So I'm sure you'll be asking a question, what do we really do at the Start of Compliance series? We realize that if there's one thing that limits the productivity of businesses is lack of information, and not just information in itself. It's actually lack of the ability to take the information and implement. So one of the things that we literally had to do, we decided that it was important for us to really just educate. There's a lot going on in the startup ecosystem. As we all know, in 2022. About $4.8 billion came into the startup ecosystem alone, and we're even talking about just on the disclosed rounds, right? And of course, after more funding announcement, we had about $4.8 billion coming to the African tech ecosystem. As we all know, and as was rightly predicted, if you go back to the first series that we had, we literally talked about the fact that there is a lot of market reset. As it stands now, investors are closing their checks. A lot of VCs are very wary about pump and dump. There's just a lot. We've heard about the crash of Silicon Valley Bank, and of course, so many things that had to do with a lot of close downs of a lot of startups. Most recently, we heard about Laser Pay that had to shut down operations. And you ask yourself these questions: that what's going on? I was looking at a report, and some of the things that I saw was that in the new Y Combinator introduction series, where startups apply and all, there were just a lot of changes, right? I didn't see any single Nigerian startup make that list. So it tells us that there is something fundamentally important to pay attention to when it comes to financing. As a business owner, a lot of people think that just having capital is enough to sustain a business. But trust me, life can hit you so hard that you really don't know what happens. So I'm really, really excited to just have this session. I'm very, very excited. I'm happy that, we're going to be talking a lot to businesses. We're going to be talking a lot to business owners. So I'm just here looking at the comments. So please just feel free to introduce yourself. I see Emmanuel Demoria. Welcome. You're very, very welcome. Really, really happy to have you here. Thank you for coming. I see Henry Tobechuku. Thank you so much for actually taking the time to be here. So I'm very, very grateful. Thank you so much. So without further ado, it's time for our session, and we have our guest with us. So please give me a second. I'm definitely going to be bringing her on board. But before I do that, I'm going to just read. Okay, I'm going to bring her on board. So we have nobody else but my very good friend, Rita Anwarah. I have known Rita for the past 9 and going on 10 years. Rita is excellent at what she does. Of course, her profile will speak for herself when I read it. Rita has handled transactions that have literally helped a lot of huge businesses get capital, raise funds, and do so many things. So with this, I am very excited to bring Rita. So before I do that, just give me a second. I'm going to add her now to the stream. So yes, I'm going to read her profile. You're welcome, Rita.
Hi,
good to have you here. Hi, Rita. I'm excited. Sorry, let me not smile too much. So please allow me to read Rita's profile. Rita Anwarah is a dynamic and results-driven legal professional with a decade of experience in the field of intellectual property and arbitration. She has a thorough understanding of the legal landscape which brings to the fore her strong commitment in delivering exceptional client results. Adept at serving as a registrar on arbitration panels and representing clients in a range of legal disputes, from private sector cases to those involving state government. In her stint as a senior associate of SO&C Legal, a thriving commercial firm in Lagos, Nigeria, she has successfully handled a wide range of intellectual property and corporate litigation matters, demonstrating a strong ability to manage complex cases and negotiate favorable outcomes on behalf of clients represented. In her current role as the head of Legal and Operations at Anthill Studios, Nigeria's leading media production and animation company, she is instrumental in the establishment of the corporate governance and structure of the company, while also overseeing its human resources and business operations. Wow. Rita played a pivotal role in the success of the Output deal signed by the company with Amazon Prime in 2022. Aside from her professional pursuits, she's also passionate about cycling and has dedicated 3 years of her service as the executive administrative assistant to the board of the Lagos State Cycling Association. Wow. Demonstrating her commitment to positively impacting her community. I'm sure she will share some of the things because I know she did something interesting today. She's also a member of several professional bodies and acts as the legal and operations consultant for a number of creative startups. I want you, everybody on this call, to celebrate with me my friend proudly, and of course our speaker for this evening. So Rita, thank you so much for coming. I'm so excited. You're welcome. You're welcome. You're welcome. You're
Hi,
welcome.
Rosamond. Hi, everybody. I'm really glad to be here. I finally, Rosamond was able to get me to come out of my block, and she she dragged me here. Just know that I had a gun to my head the whole time.
Figuratively, please. Right. So yes,
Figuratively.
thank you so. Of course, thank you so much, Rita. One of the things that really interests me about some of the work you do is that you are able to just manage a huge ton of roles. Yes, I'm seeing the comments. So thank you, Gona. I thank you so much. Thank you, Chechiku. Well, I'm going to be putting your comments up. So yes, thank you so much. So someone asked, "Hi, is this mainly for startups and businesses in Nigeria?" Yes, right. But the principles that will be shared tonight can be applied wherever you are. Okay. All right. So yes. So let's go back to it. Thank you so much for being here. I'm really, really, really excited. So let's go to the meat of it, right? Because we have a lot of people just excited. A lot of business owners are here. A lot of legal professionals are here. A lot of professionals in different aspects are here. And everyone wants to understand this thing about financing for startups. I was sharing before you came on board that the data shows that startup funding from 2022 down to 2023 literally had a huge drop. From Q1 2022 to Q1 2023, it was about a 91.2% drop, and it's very shocking. And the reason why it's shocking is because many times you just realize that building a startup or building a company takes a lot of energy, takes a lot of effort, takes a lot of planning, takes a lot of structure, takes a lot of competence. And some of the trends that we've begun to see, especially as startups are beginning to shut down one after the other, is that they don't have cash, they don't have finances to operate and run. So I just want to start with my first question to you, right? Which is, why is, because the topic is due diligence for equity and loan-based financing. That means there's something we have to do to position ourselves to be investment ready as a startup or as a business. So just give me your introductory thoughts, maybe some of the things you've experienced or you've seen, so that we can move to the meat of the questions. Yeah, I would like to hear from you.
Okay, so the thing is, because of how diverse my role is, I'm not just legal. I'm put at the forefront of the business end. Do you understand? Where I have to have the conversations that lead to the money disbursement. There are a number of things I've been exposed to, and which has now informed how I look at financing, right? One of the major things I have seen, the drawbacks I have seen that startups face when it comes to financing, is they don't even know the kind of financing they need. They don't know the kind of financing. People just think, oh, just give me money, let me do this. Give me money, let me do that. And the reason, like you said, of course, financing has dropped from Q1 to from Q1 2021 to 2022 to Q1 2023 because of mismanagement. Again, startup. The fact that you're a startup means you don't really have there's no history that I can really look at. There's no solid history that financiers would look at to say, yes, this is what it is. Most people that really invest in a lot of startups are really angel investors. And I'll be sincere with you. Those angel investors, at the back of their mind, are like, it may work, it may not work, whatever comes out of it is fine. But if that is all there is to investing in a company, then you won't go far. Nobody will take you seriously. So I think the first thing is knowing the kind of financing that you require, knowing whether it's a bank loan, knowing whether you want to go to money clubs, knowing whether you want to go to HNIs, right? Knowing if it's the equity financing or just loan-based finance, right? And I could give a couple of types of financing if that is fine. If that's okay by you, I could give a couple of financing. So because I'm in the media space, right? We say it's more project based. So you can approach a bank and say, or a bank or investment and say, I want to take a loan. But let me draw back a bit. The second thing is how you would even find out the kind of financing you need is you need a financial advisor. As a lawyer, you cannot do it alone. Numbers are not your forte. Instead, English is the tool of your trade, not numbers. So it is very important that you first of all go find a good financial advisor. When you meet them, you tell them this kind of project I have, right? That is what I have done over time. Because of my circle, I'm able to access some people, some very key people that make my life easy. For other startups, I'll tell them engage the services. Nothing is going to be free. You have to spend money to earn money. Really, you actually have to spend money to earn money. You engage I've engaged financial advisory firms before, who would first of all advise you the kind of facility or financing you need. They'll tell you, okay, this for this particular project, for your kind of business, equity-based financing is the best. For your project, we'll just go for normal loan financing. Even other loan financing, go for this kind of facility. There are different types. And if you do not seek the right advice, you will just end up putting yourself in trouble. I've seen where people just take lump sum loan for a project you don't need the money for till next 5 months. Yet you've collected loan today. Interest will start reading on that loan. Have you used the money? No. The money doesn't have value already. You don't know how the money market is before you get 5 months later. Everything, your budgeting and all that, out the window. You won't be able to meet up, right? So just so that we're just to help us, there's a couple of types of investment or loans facilities, right? Financing. So you have the term loan, you have the regular one, like you have the term loan that you walk into a bank, I want a loan for 500 million. This 500 million, I will pay it within 10 years, within 1 year. It depends. They're term loans, right? The next one are called project financing. You have a project. This project, you would have done your budget. This budget is going to take from now to so time. This is how much we're going to need for the project, right? You have equipment financing. Some startups need equipment. They don't need running costs. They don't need money to run their costs. They just need equipment. So if you're like a software company or like a tech company, you need systems. Those are your equipments. So equipment loans, right? Then you have the cash advance. Now this one is also lump sum in exchange for a percentage of your future sales or earnings. So I can give you the sum of 500 million when you sell or you make sales or you are able to raise money in the future. I'm going to take a percentage of it. not my 500 million, a percentage of your earning. Then you have the crowdfunding. The one I love most, or then you have the government loans and grants. Government will give you grants for this for this industry, that industry. But my favorite of them all is having a credit line. Now, this credit line, basically what it means is they have different types of credit line, by the way. They have the revolving and the rest, but I'll just give you like credit line. What this means is I have a project, or I have several projects to run. I have monies coming. I know I'm anticipating money coming, right? But it's not going to come in time for me to meet up with other projects that are in front, for me to continue to generate my revenue. So you know what? I need a credit line. You typically get this from a bank. I need a credit line of 500 million. Sorry, I keep saying 500 million. Just a thing. I need a credit line of 500 million, right? What this does for me is that from this bank, I can take out up to 500 million. Maybe not at once, but if I need money for urgent projects or something just right in front of me for running costs and all that, I will write to the bank, say, please credit me with 20 million. Please credit me with so million. Now, what this does is when you have, you have the type where you have a revolving, right? The revolving loan is one where I'll take money now. Maybe I have a credit line. It's called a credit line. I have a credit line for 500 million. But presently, I need only 20 million. I request that 20 million be disbursed. 20 million is disbursed into that account. As of today, if I was going to pay any interest, it is on 20 million, not on 500 million. Do you understand? It's on 20 million, not on 500 million. What this does is that it reduces my exposure and pressure. I'm not in a hurry. The best part of it is if while this is happening and it's reducing balance that day, just as of that day. So if for any reason some money come in and I'm like, okay, you know what? I move 3 million to that account. It liquidates my exposure to 17 million. 17 million is what I'm paying interest on at the end of that day, not 20 million that has been disbursed, right? So it is very important. It is very, very important to know the kind of financing that would fit your business. Not all financing style would work, because what this does for you is it helps you. Then it helps you plan the repayment, how the money would be used, right? So I think that's basically covers just the ground.
This was supposed to be an introduction. I feel like you literally lectured us, because I'm like, wow, that's amazing. Because first of so there are two important things you've said, right? Number one, first of all, understand what you need, right? Because it's not, and I think I was having a conversation with a dear friend yesterday, and we're talking about, because we're literally going to be going into due diligence. You mentioned very clearly that there are different kinds of loans. Sometimes it is not a loan you need, or it is not equity you need, it's loan that works for you based on what you do. So for example, now you are in the media and in media space, you are in media and industry space, right? For someone like me that is primarily in maybe like tech and all that, right? You see a lot, and I'm going to speak to that because we are lending both to the equity side of things and the loan side of things. The first thing you've mentioned now is that first of all, you need to understand where you are, your industry, and know what kind of facility or what kind of financing arrangement works for you. Because even if it is a loan, it is not all kinds of loan advancements that work for you, right?
Yes.
So I think that's very, very important, and that's super important. And I hope we are all, really, really paying attention to this, because as you have advised your clients or as you work with businesses, you need to be able to give that. But the second important thing you mentioned is that you must work with a financial person. See, I wouldn't say I learned this so important, because we lawyers, we like to be very what's the word? We want to do everything. We want to make that money. Exactly. Which is true. I will not slam my colleagues in the mud. But it's important to collaborate. It's important to partner, because we may not know essential term, unless maybe you have a financing background, you have a finance background, you have, you are trained in that aspect, which is very beautiful. That's why one of the things I've even begun to see is that you have a lot of lawyers that are trying to learn finance, because that's a language of the industry right now. Everybody's trying to, raise some form of funding. So a lot of lawyers are trying to, improve their game and get more knowledge when it comes to that. But you don't have all the time. And you need skill and you need experience. And you need somebody that will look at this document and say, no, this is not aligned, this is not aligned. You don't have so much time to gamble with your clients or with your startup, or as a startup owner or a startup founder. You don't, if you're not a finance person, please get the right people. If you can't hire, outsource based on an arrangement, right? So I think it's very, very important. Let me speak to the equity side of things. So like Rita has rightly said, right, know the kind of financing that you need. When it comes to raising equity, there are so many ways. And Nigeria as a country, and I won't lie to you, our laws are still trying to keep up to pace with what is obtainable internationally. I'll give a typical example, which is very general and everybody knows this. I know right now that one of the ways to raise capital as a startup, or is by issuing shares, what they call equity, right? And you are issuing shares. So in exchange for a particular amount, you are going to be giving shares. But the dynamics of that entire conversation deals with three things. Number one, Rita has mentioned some of it, and I will just highlight it because I'm going to speak into equity. The first is that as a startup founder, that you need to understand at what stage are you. So there are so many stages to funding. There's the basic, there's pre-seed, at the point where you haven't raised any qualified financing round. So more or less you are raising, you are bootstrapping, right? Bootstrapping simply means friends and family, your personal funds, you're using it to pay, you're using it to get developers, people. I've seen startups that have launched by contributions by friends and family, and it's not a bad thing at all. They are trying to validate their business model to show that, look, with the little we can gather together, right, we can build this business. Some of them may say, you know what, we want certain percentage of shares from your company. So what happens usually is that they will enter into some sort of shareholders agreement, or usually when it comes to investment documentation, they would use a very simple agreement that's called a SAFE. We're going to go further. Simple agreement for future equity. So that's a document that promises shares in the future in exchange for cash today. You don't receive the shares today, you receive it in the future. So what happens is that SAFE is like a check that you can cash in the future, right? If I'm going to explain it that way. So a lot of startup founders, the Kuda banks of today, the Flutterwave, the Peta, they all did it. They all raised their fundings based on SAFE agreements. Some use convertible notes. That's another conversation that we'll have. We don't want to go too technical at the beginning, but just give a holistic understanding of, there are so many ways to raise funding. So as a startup founder, or as a corporate professional, as a business executive, you must understand first of all whether your business is such that it's suitable for loans or suitable for equity. And it depends on what it is. You need to get advice. There are some decisions that I will not advise that you take without counsel. So that would be my own input to that. So let's go to the next set of questions, right? And Rita is definitely going, she's ready for us already. Like just one question now, she has given us a lot of things. Wow. Okay, it's all right. So I'm trying to get first the next question. So what are the key legal requirements? Because now we're talking about due diligence, right? As startup founders or as business executives, what should we have in place? Because doing business in Nigeria is difficult enough. When you are struggling to catch up with regulations and regulators, and you are not ready, what? Okay, this is the question. Let me not talk too much. What should startups have to become investment ready, to be positioned to be investment ready, right? So what are the legal requirements, and how should those startups be positioned? I would like to hear your thoughts from your perspective.
Okay. So really, for the different type of loans, that different type of loans determine the kind of documentation and the content required, right? So, but the basic ones that everybody knows is financial. You start with your financials. You'd audited, not your accountant just wrote something down. No, has to be audited. And then so that means you have to have like a financial calendar.
Yes.
Some companies don't, some startups don't know the essence of a financial calendar. When does your financial year start? When does
Wow.
it end? Right? Because I'm in operations as well, like I said, a number of the stuff I have the front seat to it. You have to set, that is part of building structure and process. Structure is very important. And you need to start from the day you say, I'm going to start a company. You need to start saying, this is how my books are going to be. Again, you talked about outsourcing, or at least engage. You have friends that would say, okay, I'll just help you do one or two things. You'd read about it. Your financials, and where you have your audited report for a year, 2 years, and you don't have maybe in the middle of your what they call it, your financial year, you have a management report. Your management report is going to tell you, okay, so for the past 8 months, normally it's a year that is supposed to have, financial year is a year, but then you don't have up to a year. But so far, because you're going to talk up to the point where you are, you will give them, so you have like a 6 months, 8 months management report. This is how much that has come in. This is our running cost. This is what we have debts. You have to disclose. Do we have debts, any form of outstanding facility here or there? Because if you don't do this, you do know that there's a credit bureau that most of these facilities are registered in. So they can just go and check you out. BVNs pop out. Oh, this person is in this company that is owing XYZ amount of money. You are there. Everybody can see that you're owing money. It's not hidden. We can all see it, right? So you have that, which talks about then you have the legal aspect as a lawyer. You have all your contracts, your employment contracts, are they pending litigation? That's a lot of these things go into equity, but some of them show up in loan financing. Are there contracts that are going to come and cause a problem? Because I'm an investor. I'm not, in fact, I'm not ready to, for loan financing, it's not an investment per se, because you need, I'm getting my money back and return on investment. Do you get? I'm not giving you the money and then if you sink, we sink. No, we're not sinking together. If you sink, you sink, but I'm getting my money back. So I need to know if there's anything that is going to cause like a problem for me that would stop me from getting my money back, right? Then you have again, business model. Tell me what you have done over the past 5 years, over the past 4 years, over the past 3 years. Tell me what your business plan is moving forward. All these things have to be documented. It's not, oh, just come and do a presentation, pitch deck. And it's not a pitch deck. It's actual documentation that you're going to sit down and do. You tell me, what are your business model? What's your competitive edge? Why should I give you this money? Because your competitive edge is going to show you that I can do it. So I'll give you a typical example of where I am. So let's assume that my company was looking for finance. Like Anthill. So let's assume we're looking for finance. What's our competitive edge? We are one of Nigeria's leading media and production company. We have a track record. This is what we have done so far. We've even gone as far as signing an Amazon deal. The Amazon deal, would help to guarantee a couple of things. It's an output deal. So our movies are going to go on that platform. That's a competitive edge. Do you understand? Then you have what's your target market. These are things that they would want to know. Then what's the growth potential of the company? How long will it take for this company to grow? Because if this company is something that will grow in under 10 years, what you want to get is an investor. You don't want to go for a loan. Because a loan means I'm going to get my money as soon as yesterday. You get? It's very, very important. Then you have your management evaluation. Now, this is important. What kind of people are on your management and what are their portfolio? They need to have track record. Who is this person? Where has this person worked? What's the value of this person? What's the value of your CEO and your founder? What's the value of your chief technical officer? What's the management structure? Are you heavy at the top and very lightweight at the down? Or are you lightweight at the top and heavy? These are the things I will look at. Do you get what I'm saying? In terms of structure, when you look at your organogram, when you have CEO this, CEO that, chief vice, chief this, chief that, and then you have the main people that are going to work down there, you have just two staff, and they have so many chief this and chief technical, chief operating, chief security, chief, meaning that how much salary are these chief collecting? Are we going to use the money for project financing to pay chief of everything, like to pay salaries? That's part of the things I'm going to look at. Then you have your corporate governance. Let's see your organogram. Let's see your board. It's very important as a startup, please, before you start, if you can't afford to, you can't afford, I know at that point they may not be able to afford an official board of directors, right? Like inaugural board of directors. Please have advisory board, and have very sound and people that have integrity, and if possible, people that are key players in the industry that you have. Do you understand? In their industry, what that does is, when I look at it as a financier, I'm like, okay, this person is here. I know this person. If they were to write to this person and say, please, do you know this company? They can give word that yes, I'm on the advisory board. So we know that there's a form of, like I said, there's corporate governance, there's checks and balances. Monies will not, because I want to, as a financier, I want to be sure that if I give you money, if I release 100 million to you now, I'm not seeing you buying first class tickets on this money, traveling to the Maldives. Do you understand? It's very, very important. Then you have what's your technical capability to deliver, right? Do you have the equipment and the infrastructure? Have you done it before with little or no funding? Okay, you've done it before. Now, what you're asking for, the money you're asking for, how will it help you technically? Will it help you upscale? Right? And then I think these are the first things you want to look at. That's the legal aspect of it. And it's very important that you look at every document, even the offer letters that come to you. It's very important. I've been in a situation where they told me, oh, don't worry, this is how it's usually couched. I didn't like how it was. The way the paragraph was couched was not looking clear. And I said, okay, please, could you explain what this paragraph means? And they were like, oh, don't worry, it's a boilerplate. I'm like, I understand that it's a boilerplate and it means this other thing, but please, can you make it mean it in paper? Because a lot of the times when you're, as a lawyer, finance people don't want to talk around you. I'll be very sincere. They're like, don't bring a lawyer to a negotiating table. So you too, as a lawyer, don't go there with your fighting gloves. I'm a lawyer, right? It's very important. But look, again, like I said, English is a tool of your trade. You need to be able to look at the documents. What you don't understand, ask. Don't feel, oh, finance is mathematics, they're numbers, they're not my thing. You would understand plain English that is in document. So these are the things that you need to, these are just the documentation you need for your, like, just basic financing. Your financial reports. You see those financial reports, you may not understand it, but look at it. Trust me, you understand profit and loss. So where it's not adding up, you know that it's the kind of money you cannot ask for. There's only the kind of money you are going to get, the money you're requesting for has to be, to an extent, proportionate to what you have raised the year before, unless you're going for financing, right? I don't know. So that's basically what I can say for now.
Wow. See, I don't even know what I want to add to this, because this is just, in fact, I was about to say drop mic, but it's okay. But to be honest, right, it's so critical that you need to have these things. The only thing I would just add, because everything you mentioned, and I know you are talking primarily to loans, is also very much applicable to equity. So let me explain why. Usually in the process of, so I know that there are a lot of startups here that are like, okay, let's just assume, right, because we are trying to cater to different aspects, those who have gotten to the point where yes, they have become very loan worthy. One of the things that Rita mentioned is that for you to have beat your chest and say I am ready to obtain a loan, she mentioned something about your business model, and that one was what just caught my attention, because your business needs to show that it's viable. That is why even in the startup ecosystem, whatever it is you are launching into the market is called what? A minimum viable product. That means that you have been able to create a solution that is targeted to a customer segment, and you've been able to validate your proof of concept to show that that market can pay for what you are offering to them or what you are bringing into the market. That is what gives investor confidence, and that is just one of what you have to look at. She also mentioned about this thing about bonds, and I know that a lot of people. So we have a question here, which I think we can easily just answer here, and I think these are some things that we can answer. So be a question and answer. So someone asks and says, how can we build an advisory board? I know she had some thoughts. I would like to say, you are in an industry. Look out for people who you know are solid in experience, in capacity, and can offer advice. Reach out to them and say, sir, you can write an official letter. And the thing is that as business owners, as startup founders, you must learn how to build relationships. It is so important, because let me tell you, most of the investments that you will get will come from recommendations than applications. So you must have people in your space that can vouch for you. And there should be people who have a huge and good track record. Look through the basket, look through the audience you have, and reach out to them and say, sir, we would like you to be an advisor on our board. It's as simple as that. The worst you get is a no. And once you get that no, keep looking, right? I would love to touch something else. Rita has mentioned also about the fact that your corporate governance structure is so important, and that is what I think is so important. A lot of startups are just very excited about building products. They don't understand that what makes a product last is the system around the product. Rita said something very important. What's your organizational structure? Because many times when investors are doing due diligence on startups and are trying, because I've been privileged to sit, on the side of the investor. And one of the things that I realize is that a lot of startups are just very excited about collecting money. When you start asking for things like, what are your projections? What are your plans? What's your business model? Because there are sometimes that you just say, so for example, you say, we want to reach 36 states in 3 months. And then you just come up with one very beautiful Excel sheet that shows numbers. You can put anything on Excel. We all know that what is on Excel and what is in reality are not the same. So it will take a diligent investor to look at the industry, look at the news, look at the fact that a lot of banks, and I'm speaking to startups now, a lot of banks' shares as a result of the crash of the SBV, that's the Silicon Valley Bank, a lot of bank shares have dropped, right? You have to look at the market. What's the market saying about this particular service? Because there are some business ideas you have that the market in fact, the market is not ready for you. So you need to understand where you are, right? You need to understand where you are, and then you need to understand what exactly you are doing, because it's very important. Your board, you need to understand your structure, your fair. Basically, those are the things they are looking for. Then, of course, capacity to make profit, because every investor wants to make profit at the end of the day. And when loans are the way a person who gives loans, how the person is rewarded is interest rates. Rita, am I right?
Yes.
In equity, it is the capital gains that they make from the sale of their shares in your company. So without being too technical, right? The moment you enter into an investment agreement with someone, and the person maybe values, because one of the things that usually happens in an equity-based financing conversation, that there are discussions on what is the valuation of your startup. And this is a financial conversation. This is not a conversation that you just open your eye, you just, because you just built one software, you open your eye and say our company is worth $5 million, and you want to collect money based on the $5 million valuation, right?
Sorry,
There are so many.
if
Yeah,
I
please go
can,
ahead.
I just remember two very important things you need. There's collateral as well. There's collateral. See, this collateral, it's something that I've seen that a lot of startups struggle to get, because banks, let's start with banks, they want security for the money, right? In fact, I can tell you that if you have collateral, once you have collateral, like in terms of bonds, like property, none of these loans will go smoothly. But then, if you have a contract, if you have, oh, I have this government contract that the government has awarded a contract to me to build XYZ, so money is going to be coming so like this way in tranches. This is I need money to be able to do this project. That you see that note, that contract can serve as a collateral, but it has to be expressly stated that look, this thing is, we're going to do it. It's for this company to do, and we have agreed to pay them. So I won't go into the technicalities or how deep that conversation can go. Yes, I can't go. I don't think we have that much time to discuss that, but it's very important. Collateral is very important. Now, to answer the other guy's question about advisory board, yes, it's good to look at people in your industry, but see, your advisory board has to be very diverse. What are different departments? You have to have someone that basically speaks to the legal aspect of the business. You have someone that speaks to the business aspect of your business in terms of the business development, in terms of you have the person that speaks to the brand communication, brand positioning, right? You have someone that speaks to your side of your industry. It can be one person can speak to two different sides of it. I personally I'm on an advisory board, and I speak to both legal and the operations in terms of process flow, to maintain quality control. You understand? Maintain the quality of the output products that the company is putting out, to make sure that quality is not dropped. So I'm basically, when we have a meeting, I'm basically saying, within this time and this time, what are your compliance? Have you done the compliance with taxes? Have you? Well, that's one of the things you're going to have to show, that you've been paying taxes and that you have your tax clearance and all that. So that's one of the things that you need for your loan-based finance. But like I said, you can't, so to create an advisory board, don't overthink it. You understand? Just people that can tell you the truth to your face, and people that you respect and that are higher than you. The fact that somebody is the person can be your call mate if you're a lawyer. The person can be your friend, your coursemate in university, who has the person gone ahead of you and understands this terrain you are entering, and can call you and say you are doing something wrong. This is how to go about it, and then you would listen, because that's why they are there. They're an advisory board, right? So you can have different people speak to different aspects of the business, so that what that happens is when you have, because you are running a business, every department is going to come up with a report. So you have the Q1 is done. We have a Q1 report. You have an advisory board meeting at the beginning of Q2. You have sent them the reports ahead of time. They've looked through your reports. They have questions. You sit down. They ask your lawyer, what's this, and then if they can't respond to it, your lawyer has to. The key people are going to be on that meeting to answer to those questions, because you as the founder can't answer to everything. You have to let people basically explain what they did and why they made some decisions they made, right? Okay, you want to go and take a facility. How are you going to stop? How are you going to basically come up with the money? How are you going? How do we plan to repay the money? Or you want to come up with 500 million? No, the advice will tell you, no. How about you go for it, 200 million? Tell you this is how you think. The finance person on your advice will say this is how you're going to pay it off. Remember again, seeking financial advice. You have a financial someone that is finance exposed on your finance and on your advisory board, and can tell you no, we do not believe that. So you want to engage a financial advisor. Who is the person? So these people, these are what makes the financial advisory board. As the company grows, these people can now transform into being the board of directors. When they become the board of directors and you have to take it to CAC and the rest of it, you know that you have these checks and balances. You must answer to somebody, even as a CEO. So what that means is when you now want to go get finance, loan finance or whatever it is, the money, we won't say, let's say project financing, they release it to you in milestones. It means that you cannot, unless you hit a milestone, you can't access the next money. Right? So basically I think that answers the question. I think I added a little bit extra to it.
Exactly. I was about to say that thing about milestones is so important, because if you don't hit one, you haven't shown us proof of work that determines that you should hit the next milestone. And I find this very, very common also, even in the equity space, because when you are even negotiating your safe agreement and the likes, right? Usually the investor and the startup will sit down and say, okay, show us your use of funds, right? Show us your KPIs. Help us match your spending with your use of funds and the goals you are going to achieve. It has to be very clear. Many times they even ask for month by month KPIs. And we're not even just talking about financials now. So, for example, if you are looking for investment for capex and opex operations, right, capital expenditure and operational expenditure, it's okay, it's fine. Let us know what's the impact of the funds we are going to give you on that process. How is that process going to translate to value? Because one of the things about equity investment is that your investors are not getting rewarded immediately. They are not, right? So they are literally staking their money, their funds, their resources on you. And we're not talking about grants now. This is about investors that really want to cash out at the end of the day, right? So I'm going to move to the next set of questions, but this is so interesting. Like, we can stay here for a very long time. But let me just add this thought, because I know that a lot of people are like, well, I can't do loans. We have not reached that level. So let me explain just a little thing, because I was talking about valuation before you answered someone's question. When you are having an investment conversation as a startup founder with an investor, one of the things, the key discussions you are going to be talking about is your company's valuation. And you must be very humble at that stage, because like I said, some startup founders will wake up in the morning and tell you that they built app, they launched on this, they have billboard, and now they are worth $10 million. Sir, please be calming down. Be calming down. We all know that some of these things are fluff. Let me give a typical example. Frank, which was a startup company that was financed by JP Morgan, right? As of last year, they literally were sued by the same investor. Why? Because they massively expanded their valuation and used vanity metrics to judge the valuation of their company. So one of the things they did, I think they falsified about, and I don't know the exact figures, but I know about 250,000 customers that did not exist. They literally created records of customers that did not exist so that they can bump the value of the company and give investors more confidence. It was later discovered that all those facts, all those figures were lies. And at the end of the day, they are being sued for a whooping amount of millions and millions of dollars. So what am I saying? Look, be very open and be very honest. Yes, we have not gotten our first 1,000 customers, but these are the milestones we want to achieve. That is why you need to be very open. And one of the things that will help you and position you before an investor correctly is having your structure in place, having people that, like Rita has said, literally being able to speak to you as board advisors, right? You have a clear plan of the use of funds for your company, and you've been able to match that plan with your expectations. And 4, you are properly able to value your company and then give your investors confidence to say that, look, if we are giving you $100,000, right, and we are doing this transaction with a safe note, right? we are looking forward to you growing so that you will be valued higher. Because, like I mentioned, for equity based financing, the way your investors cash out is by capital gain. And for those of us that know what capital gain, it simply means the amount that is gotten as a result of interest on the sale of their shares in your company, which is a form of profit. Okay, so very, very important things that you need to have as a startup. So let's move to the next set of questions. I'm really, really enjoying this conversation. So Rita, my next question is to you. I'm sure we'll be done. We are already close to an hour. We're going to keep some minutes for questions. So I think you've spoken to legal implications of different kinds of loan-based financing. But I want to ask some of these questions. What are some of the, okay, I think you've also talked about common mistakes, but I would like to know from your own perspective, what are some of the ways that these startups or these business owners can negotiate, right, the terms of their loan-based financing in such a way that it is helpful for them and it doesn't stretch them too thin when it comes to fulfilling back those obligations. So based on your experience, what are some of the ways that some of these startups can really, position themselves to get very good terms for their investments, and how can they, negotiate properly and wisely before an investor? I'll also speak to that as well later.
Like I said at the beginning, the first thing is understanding where you are, understanding your product, getting a financial advisor to give you the different options that are available to you. When you have different options available to you, then you can now negotiate terms. It can how do I put this? It's not no one loan is the same. The dynamics may look alike, but they're not the same. I've seen it in loan a term loan offer that said, oh, if you default this particular money, the defaulting figure would attract 40% interest. 40%. You as the lawyer, go back and ask questions. What's the bank rate? What are the rates applicable in the market today? Negotiate the term. Don't be in a hurry. Financing takes time and it takes detail. Don't be in a hurry to collect the money. Don't be excited by the volume of the money. That is one place I have seen that startups make mistake. You are so in a hurry to collect the money that you don't read the fine prints. I've seen that severally, and then it's you get to the point where it's actually you start choking, you start seeing CEOs have panic attacks. I'm not joking. Negotiate also, building relationship when you are credible. Start small. The credibility of how you have managed when you are financially prudent, even in the monies you have, you're financially prudent. It will show in how your company records are. Once you're financially prudent, it has a way of showing that look, we are credible. And they don't be ready to say, oh, that same overvaluing yourself. Right? Overvaluing, I'm going to go and get, I want the negotiate your terms. Negotiating is like be in the room. Or speak out when something doesn't work. You're like, oh, this doesn't work. I'm not comfortable with it. Speak out when it doesn't work. Because at some point you may have to ask for a moratorium. Also know that something called a moratorium is available to you. And once you see that you're not going to be able to meet up in time, be quick to ask for it. It's about this. I think the normal time I've seen is about 3 months, really. Because I know a lot of companies during the COVID that had facilities running had to write to their banks to say, look, because I had to write to a couple of banks as well to say, please, would like to moratorium for our clients, XYZ, 3 months, 6 months, so just let's take a break for this period because of the economy, right? It's looking at the and as for lawyers, I'd say to lawyers, but if a document, don't feel overwhelmed by the document. If you don't understand something, see, they may want to phase you with all the financial jargons and the big English. Do your study. Do your study. Find out what is best for your client. Ask questions. But the truth is that no one loan is the same, right? But generally is know where you are. Know what kind of loan is available for you. What kind of financing? You can meet HNI. You can also, the another way you can do it, I'll tell you this upfront, is you have a project, someone said I'm going to give you money for the project itself, and we'll share the profit be okay to take it. It is okay to own. It's better to own 3% or 10% of 3 billion than to own 100% of 3 million, because it makes no sense, right? It's very important. But you see a lot of startups that want to hoard. Oh, I don't want to take risk. But know that with that risk comes responsibility. It means you're going to be prudent. You will sit down and do the work that has to do with it. You're going to, those milestones, hit it. Once you hit it and you pay off the loan to an extent, you will see that the banks or whoever, they will come back. They will be the one asking you for loan. Like, don't you need money? Come and collect money. I've seen that happen severally. Come and collect money. We want to give you money several times because you have shown that you have been prudent with your spending. You're not seeing money and being excited, and you're not in a hurry. You're not rushing your lawyer to let's sign this. Lawyers, like, you know how I'm not joking. I've seen where I've been in a situation where like our lawyers can be very difficult because I said, please adjust these clauses. On the face of it, you're saying a different thing and you're explaining a different thing to me. This thing you have said, put it in the contract. I don't want the clause the way it is. And I've had clients say, Rita, let's wrap this up. I'm like, no, you either let me do my job or you take it somewhere else. Because when it comes back to bite you, you would say I was the one, right? So this is what I would really say, how you would negotiate yourself.
Yeah, I will start from the last part. I was literally speaking to a VC, someone that's quite popular in the VC space. And the truth is, ask any proper finance person, they will tell you a typical due diligence process takes 3 to 6 months at the minimum. But guess what? Because there's money on the table, everybody like sign. Oh yeah, there's no time. And then you are skipping very, very critical and important things. And I think what is happening right now is that a lot of the cloak is going off a lot of investors' eyes. They're like, it's not what it is, right?
Yeah.
We have to be more careful. A lot of investors now are hiding their checks, right? As in, literally, how can investor funding drop by 91.2% in a year? That shows you that there is a lot to do. And if you look at the Nigerian ecosystem landscape, yes, there's a lot of innovation going on. But I think that as businesses in Nigeria, and I'm speaking to those because I know that a lot of people are going to be watching from different parts of the world, but I'm speaking to us as, Nigerian businesses, is that we really have to come to terms and position our businesses in line with international best practices. You cannot be playing local champion. As you are a startup, your competitor is in North Korea. I said North Korea, one interesting country, and they are literally doing work. So don't be so excited about funding. That's something that Rita has said. We'll also start rounding off, but I will speak to the equity side of things as well, right? I've mentioned safes as one of the ways by which, and we're talking about how you can negotiate terms. So one of the things you can do as a startup when you're having a conversation with an investor, especially when you decide to go the safe route, right? You're using a safe agreement. Understand first of all your structure as a business. Let me tell you why. The Company and Allied Matters Act, particularly Section 146, states expressly that you cannot issue your shares at a discount. Unfortunately, that is the position in Nigeria. So guess what? If you are a startup listening right now and you are having a conversation with an investor, maybe in Nigeria, your business was incorporated in Nigeria, and you are using a safe agreement, let me just give you notice now. You are running afoul and you are exposing yourself as well as your investor to litigation. So guess what? This is what a lot of business or a lot of startups do. they go and incorporate in Delaware, in the US, in the UK, in Canada, where the laws that govern their business allow them to use safe agreements or safe documents. So why am I saying this? Number one, understand the legal landscape of your business. And the truth is that because of the fact that when it comes to equity-based financing, sometimes the process or the route by which you are going to finance your business may not be in tandem with the laws, or you may have to pay attention to some regulators. Please involve lawyers. I'm saying this again. We are not expenses, we are necessities. And I usually tell this to business owners: you must factor your okay, let me say this. They usually laugh and say there are three people you should not lie to: your doctor, your lawyer, your pastor. Let me tell you, there are three people that you should not ignore as a startup or a business owner: your finance or your financial advisor, your lawyer, and of course your people operations person, because those are the three pillars on which every business is built: the people, the finances, and the regulations. Very important, right? So that's the first thing I would say. That as a founder, the moment you are very aware of what is happening in your industry from these three perspectives, you will be bold before any investor and make the right decisions. The second thing I will mention before we move to questions, and please, everyone that is on this call, if you have a question, please free to shoot the question at us. We can't obviously answer everything, but you can always send us a message, but you can also put that in the comment section as well. The second thing I want to say is, like what Rita has said, which is go back to basics. As a company, does a safe work for you? Are you qualified to issue your shares at a higher valuation at a later period? Are you waiting to raise series funding and all that? Go and research. If you don't even know what it is, please just go to Google or go and do a course on investment funding for startups using safe agreements, because that's the basic thing. The second thing is that sometimes some startups will use convertible notes. So a convertible note basically is you are issuing shares, but it's going to be based on a timeline or a milestone period. So it's like a debt note, but it has shares attached to it. Yeah. So convertible note, where you have the document that basically states that you are giving a 12-year period. I'm giving you $100,000 within a 12-year period. You're going to give me a particular amount, this amount back as interest, but I'm going to be having shares the moment when that period is elapses. The third, which is very common, especially amongst Nigerian businesses, is that they just collect the money and they issue shares. So there's a shareholding agreement, shareholders agreement, right? That they come into and say, this so person to invest or to bring in this money as a shareholder has come into the company as a shareholder and is getting this amount in return, and the shares are going immediately. Then of course we know that when you are building yourself from a startup and you are launching and you are scaling, you have what is called an initial public offer. At that point, you scaled your business to such a point where you can now go to the Nigerian Stock Exchange and be listed on the capital markets, and you can have people pay for to be shareholders in your company, because now you are a public company. There are different growth stages for your business. So as a startup, like what Rita said, know where you are. You obviously can't do an IPO, because there are lots of things that you have to qualify to get, right? You're not a public company, you're a startup. So understand that these structures alone, they don't get easier, because as you begin to increase the level of financing you need, there's more structure, there's more need for due diligence, there's more need for due corporate governance, there's a need for all of these things. So it's very important that you pay attention to that. And this is speaking also from the equity basis. But guess what? All these principles apply both in the equity space and in the loan space. But you need to get financial advisory and legal advisory on your unique circumstances. Does that make sense? Right? I think it's something that very, very important. Okay. So yes, Rita, my last question, because I can see that we're already an hour into the session, and I'm so energized. I don't.
Cosmo, you're muted.
Muted since.
No, you just got muted like 2 seconds.
Thank you, God, because I said a lot. Okay, so my last question is, so what are, and I know you've answered this question before, in terms of next steps, right? What's going to be your advice for businesses that they've listened to this wherever you are joining in, and they're like, wow, there's so many things that we haven't put right. Like, where do we start from? Give us a roadmap. Give us a roadmap, because one of the beautiful things about having you here is you're not just speaking as a lawyer, also speaking as an operations person, and building the structure is something that you have been able to do. So for the startup founders or the startup owners here, or lawyers that work with these startups that don't even know where to start from, please give some advice as to where to start from and help us start the process.
The first thing you should do is look at the structure of your company. Do you have a structure? Now, structure doesn't mean, oh, this very big, you must have this, the diagram has to be so large. No. What kind of company am I running? What's the structure in terms of who are these people? Who are the key people here? You're muted, Rosemond. Are you speaking? Okay. So, what is the structure of my company? Because when you have the structure, then you can assign people to roles or know which responsibility falls under what department. They know who you are getting to handle those roles. It's I get that a startup, so you have people, one person occupying like 2, 3 roles, right? But the JDs of that person, the person knows that does the person know that they're occupying those 3 roles, or you just employed an admin person who has now translated to your HR, who is also your runner, who is also the accountant, who is also no, nobody's going to take you seriously because you're not taking yourself seriously, right? That's the first thing to do. And then you move on to your documentation. Document everything. I can't emphasize this. Don't just open your, just, I want to send something very important, you send through a WhatsApp chat. Write an email. I'm not saying, well, thankfully, Evidence Act allows for WhatsApp chats and all that now, but there's a seriousness that comes with putting down your thoughts clearly in an email, communicating with people. When you do that, you look at to enter into contracts, actual contracts, no verbal contracts. Let your staff have contracts that are in line with labor law. Your accountant. You may not be able to afford an ICANN certified accountant just yet, because those people come very expensive. But you can get someone that understands the basics of profit and loss and gives you a report. Create a process flow that allows you to be able to say, every month you give us reports, this department give us a report, because those things are what would help you know where your company is. If everybody's able to give you a report, the accountant says we spent so running cost. This one, by the time you give it 3 months report, you will know where your money is going. You will know these are the things you will need to nip in the bud. By the time I don't know what kind of production, because we have run a production company with movies and all. By the time the head of production does her report, she has an entire, this is how much we're budgeting. This is what happened. We went above our budget because of this. In the last 2 movies, we know that, oh, these elements cost us more. So we know our next movie or next project, we're going to add extra money for these elements. We can take out from here and take out. You know. So when anybody asks you a question, from your sleep, you're able to tell us where your company is. From your sleep, you can defend it. That's the first thing. The next thing I would say is, like you had already said, see, get a lawyer. And don't be excited by money. Don't be excited by money. It is so important, because once you get excited by money, investors are like investors or back, they would come with their guard dogs. They're coming at you, going to come at you, and they are also in need for business. So when they say that, oh, this one is just excited, you would make silly mistakes. You just jump at any offer. But when they see that you know your onions, you may not get that particular finance eventually, but you know what you won't do wrong next time, right? These are the things that I'll just say, look, again, just know where you are, get the right people with you on this journey. You need it. It will take a while. You may take a while to get those right people. So take your time. That's what I would say, really.
As in, I don't even have any. Thank you so much. I don't even have anything to add. I'll just wrap up with this, right? Because we're going to have to taper down now. Due diligence is both ways. As the investor
Yeah.
is conducting due diligence on you, please, as a startup founder, conduct due diligence on your investor. Know their track record. Know the kind of investor these persons are. Because let me tell you, there are some investors that, let's be very honest, they couldn't
Mhm.
care less about the health of your company. They couldn't care less about the health of your company. They just want profits. Is that the kind of investor you want? Do you just want the money? Leave us, we'll do our thing. Or some investors are like, I want to put my hand into this business. I want to be able to nourish it to health. I see this startup as a baby. I want to work with you. That's why you see some investors that will come with industry networks, that will come with industry access to some things. For example, I know about this Google Black Founders Fund. They give you cloud credits, AWS credits. So you need to understand the kind of investor that is coming and what they are bringing to the table, because it's beyond money, and that's what Rita has mentioned. So also conduct due diligence on your investors, and of course, in a territory like Nigeria, where a lot of people try to siphon or do money laundering and they call it investment, like, you need to understand the track record of your investor. Conduct KYC on the person. Does this person fit the kind of person that I want to have to be sitting on the table with my fellow board advisors to be making decisions for us? A lot of people don't think about this. The last thing I would say is, what is your exit plan? What is the exit plan for your investors? Have you sat down and determined how you, because even scripture says it, if you are building a house, you will sit down and count the costs. So as a startup founder, sit down and have a strategy for how your investors will exit. Because many times a solid investor will ask you, what is our exit strategy? And if you do not know it, or you don't even have it, it already shows that you're not ready to even give them what the value that they expect as investors in your company. So this is what I will add, and this is what I would say in terms of my own final thoughts. Of course, there's so much to discuss. We obviously cannot say everything today, but I think with these few points of ours, every startup on this call, or every professional on this call, should have gotten a thing or two from some of the things that they need to understand as far as legal due diligence for obtaining loan, as well as equity-based financing goals. And I would love to have your comments if you are still here with us. If you have any questions, I'm not seeing any question on the comment section, but I think we're I'm really glad that we had this conversation. I think it's the shortest conversation that we had on this thing, but it's just to stir up our minds and see how important this thing. And then Rita said something that's very important. Like, please get a lawyer. Like, we are not sharks. We are literally paid to take some burdens off you. I was sharing this with a friend of mine, who is about to launch a product, and I said, this headache you are having now, sure, you know that if you have the right team of outsourced professionals, you can sleep at night, right? You can literally sleep at night and have these discussions done with good understanding, with good terms negotiated for you. So these are my final thoughts. Rita, what are your final thoughts? Because I'm not seeing any question. So I'm sure for those that will be watching because this session is currently being recorded. So if you're going to be watching this session, please feel free to shoot up your comments. You can send Rita a direct message. You can send me a direct message. Our names are on the screen, so you can always search for us. And of course, you can always reach out. So Rita, what will be your final thoughts to
Um,
those who are viewing, and then of course, just have you round up for us.
Um, well, it's basically all I've said from the beginning is know where your business is. Um, don't be in a hurry. Don't be excited by money. No, just get the right people, get the right team, get a lawyer. And as for the lawyers, you're not a do all and know all. It is also good that you collaborate, advise your clients to say, look, we need XYZ person, industry experts to be able to do this. So that you're able to, you're better, because what happens is that you are better suited to advise when you know what the risks are as a lawyer. Then as a startup founder, operations is very important. Setting up your structure from the day one that you want to start up. Having proper contracts for your staff. Even down to your intellectual properties and the rest. They're very, very important. NDAs and the rest are very important. I would not like to. I know how many people would like to skip the NDA part because we're looking for money. I insist. I always insist, whether you're a bank or whoever. Don't get so scared that the bank is a big entity and you are small. It's a lie. Get the bank to sign an NDA. What that NDA does is that all the staffs are bound by it. They cannot share it. Get them to sign an NDA. When they sign the NDA, then you can have the conversation, the full conversation, that you can share all these documents, because these documents, like it or not, are not public documents. These documents you're sharing for them, your financials, your business model, and all that, they are not public documents. They should not go outside the people who have seen it. So it's not something you just share randomly. So that's what I would really, really say. Pay attention to your structures and the rest of it. And I trust you'll be fine. Mhm.
So much. Thank you, thank you, thank you so much. I love the part about the NDAs because I know I didn't touch that. You are not the grass and the investor is the giant. You both have
Mhm.
they have a lot to benefit from you as much as you also have a lot to benefit from them. So once you have your structure and everything you need to do in place, have the confidence to also place some cards on the table and say, this is what I require, as long as you have done your own part. So thank you so much, Rita, for this amazing, amazing words, thoughts that
My
you have
pleasure.
conversed. We could go on. Honestly, I am so curious as to some of the things you mentioned. So I'll be reaching out to you. You know where we meet now. So we definitely will still have a further conversation on this. But please, please, guys, thank you so much for being here and for being with us. We're going to be signing off now. I don't think we have any more questions, and I'm sure that a lot of people have gotten value from this conversation. So thank you so much, everybody. I want to wish us a very pleasant evening, and please share this link. Share with somebody who is having issues, concerns as to how to start their capital and fundraising process. Let's reach out to us if you have any concerns, any questions. We'll definitely be able to assist. So thank you so much, Rita, for being here. We really, really appreciate you. Thank you for your
Thank
time,
you for
and
having me.
very, very happy. All right. Have a very pleasant evening, everybody. And bye for now. And see you at our next series, and we'll announce it very, very soon. Thank you very much.